Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst here, Curtis Scouten, jumping into the charts on this Friday, August 26th. What an impeccable Friday sell-off it is, coming on the back of Jay Powell. He did not soothe the markets. Going into this trading day, most people were thinking, because of the last four Federal Reserve meetings, that Jay Powell was going to soothe the market and we're going to rally off it. Because the last four FOMC meetings, the markets have bounced and bounced substantially. And now on the back of the Jackson Hole meeting, Jerome Powell is very quick to make it clear to the markets that, listen, that Fed pivot that people are hoping for is not coming. So now there's going to be clear pain. I think the big kicker is that he said there was going to be clear pain in the housing market. That's what stood out to me. When they start speaking ill of the housing market, that is the mother of the bubbles that is still going to deflate. And as you put pressure on the housing market, that's where the consumer really starts to falter, and that's where all of these risk assets just start taking a massive compression. And overall, nothing in his rhetoric was really much different other than touching on the housing, and also other than the fact that he said inflation is still clear, that studying history, they know it's worse if we let inflation go higher. So look at this beautiful sell-off. This is why we're net short the market, and our portfolios have been outperforming today as a massacre on Wall Street happens. And this is what it's key. We've been banking day trades, we've been banking swing trades. We played a lot of this rally that happened to the upside, but we knew it was time to get out. Markets were on borrowed time, and that's certainly what we're experiencing now. Now with interest rates surging again, the US dollar surging, things are taking a tumble here, and this is just all controlled selling. Whenever you see minimal bounces, it means that this is an algorithmic sell, and all institutions are just hitting the sell order slow and controlled. They're not trying to make this market freak out. This has just been a grind lower and lower and lower. And when you start seeing these types of sell programs, we've seen these before, where if we flip to the daily chart, when we start entering this type of sell period or this type of sell period, that's where you start seeing this tight, narrow range sell. And honestly, it's a lot of technical damage now done on the daily. Obviously, we get a weekly candle. With many stocks reversing, a lot of the weekly signals are just going to be confirmed on a weekly basis. And it's going to mean that there's a lot of technical damage done to the downside, which means that it's likely more likely to continue and search for new lows on the chart. So I think the markets are certainly in trouble now. We're going to be witnessing a lot of technical damage, and honestly, it's something that we have been positioned for, because this was an extended classic bear market rally, and now it looks to be selling off very harshly. So S&P down on the day 2.9% and bleeding. QQQ, look at this sell-off. Boom, massive drop. You are into a little bit of support, but there's really no buyers down there. And the interesting thing about the S&P is, if we look at some intraday analysis, this was your channel of consolidation that we're watching. It looked like you were going to break out. We had that 50% retrace as our resistance there. And if we flip to the hourly, you get to see it clearly. This is a beautiful bear flag pattern. And a lot of the gaps, it looked like we were going to fill to the upside. But now I'm finding it very difficult that we're going to see these gaps anytime soon. You know, maybe if things start to change, you know, potentially if the dollar starts to roll over substantially. But at this point in time, I just don't see that happening. But look at this beautiful consolidation up. A breakout, a little bit of a bullish pattern, fake breakout. That's why you never ever got confirmation of this breakout. And the interesting thing is, you wanted to see confirmation after this impulse move. Never got that. Consolidation was getting a little wonky and choppy, and you failed to confirm and break out. And look at this terrible sell-off. And this confirmation, this topping till, I was watching it intraday before the Fed meeting, and markets rallied up and reversed. That was a signal that, okay, the bias is looking to be to the downside. Someone always knows something. That's why price action always beats everything. The candle that I saw was this topping tail. That is a thing of beauty. If you look at that on the 30-minute chart, pre-market topping tail, that means someone knew something. And honestly, people always have insider information. That's why the charts and the price action are ultimately superior, because you get to see people's reaction if they do have information that the majority of people don't have. Taking a look at natural gas, it was positive on the day, but just with the broad market sell-off, it too is seeing some downside, just down 0.7%. Oil also seeing a little bit of a flat session. It's been up, it's been down, but just holding there, considering it's a broad market sell-off. It's truly, truly impressive to see oil holding on there, especially with the hawkish comments that Powell has made. Ultimately, let's just take a look at gold. Gold has also been doing pretty poorly, heading back into the support there, so you're still technically in check. But if we flip to the weekly candle on gold, it's certainly not a promising candle that you got another down week without any real confirmation that the dollar is slowing down. So that's obviously the big move as to why the dollar had a massive reversal, and now it looks to be challenging and potentially breaking out higher. If this dollar breaks out of these highs here, look out for the indices and look out for the sovereign debt markets. These markets could have, you know, a very, very sharp move down, something where we can call it compared to a Bloody Monday or something like that. So honestly, these markets are in a lot of trouble. If we look at rates still haven't really adjusted yet. So they're kind of flat on the session, but still holding that 3% mark. Looking at the weekly, we got yet again another weekly close of higher upside in rates, which is technically still bullish for interest rates. And now this could be a little bit of a consolidation pattern that's happening in the form of yields potentially rising more if inflation remains sticky. So lots of things to consider, lots of things to watch, but overall massive damage done, and the spiders just keep going. So ultimately, let's just see if we have some support on the daily chart. As I flip to that, let me flip to the daily chart. So again, tons, and look at this sell-off. This is truly, truly impressive. It's just a grind lower and lower and lower. We did add to or pick up SE. We have a lot of short exposure, but SE is a quality. There's massive accumulation happening. I got a few accumulation levels, but honestly, we just picked up a little bit here, starter position. It probably will go a little bit lower, but again, it's something where I do like to sometimes hedge our longs where I see potential hedges also playing out in our favor. This is a kind of stock that can potentially go against the market just due to the fact that there is buying pressure, and SE has been demolished, and it's actually putting in a little bit of a rounding formation. This is actually a very bullish pattern here where you have a left shoulder, a right shoulder. Now it hasn't triggered, but there is a potential rounding formation starting where if you have a strong breakout, you can come test this 135 market, even if the big caps start to fall. So I think there's a potential gap fill here around 61, which will be another add level, and you could come down to double bottom. But I think SE is at an actual decent valuation for where we currently are in this market cycle, where I'm comfortable accumulating SE, especially as I see massive accumulation patterns going on. I mean, if you simply look at the volume on SE, you have these two massive impulse buy days over here, and in comparison to this sell-off and even today's sell-off, yes, there's a little bit a longer time in the session, but it's been on very, very light volume, which means that there were a lot of buyers coming in at these levels, which it should be defended in time. And even over here, you have a lot of buyers coming in. And the volume trend that I'm noticing is that you're making a lower high on each volume bar over here, which means that the sell side pressure is actually dwindling and falling away. So as you make lower highs on the volume, it means that the sell side pressure, so just a little bit of education there, volume analysis is very key. There's a lot of things that you have to consider as well beyond volume, but it just gives you a little bit of insights as to how price action is responding. And I just find it very, very helpful, and it's a great tool to add to your arsenal of technical skills. But overall, these markets are in a lot of trouble. Let's continue to see how things price out. Once again, my account is at a new high on the year. So therefore, all of the trading capital swing trades, if you have been trading alongside with us, and yes, it's difficult to do so, but we have been hitting a very high batting average in terms of this year. And we have to stay nimble, stay humble with these markets. But once again, we're at new highs of the year on our swing trading count. So as these markets continue to grind lower now, we are perfectly positioned, I think, in my opinion, to capitalize on the downside. And I'm certainly got my eyes on names that I'm willing to buy. And I love these counter trend plays in these bear markets where the sentiment slowly starts turning bearish. You see how fast the sentiment on Main Street and the FinTwit community turns bearish again. And that's when you actually want to be buying, when you've had massive a little bit of capitulation, not massive capitulation. I don't think we're going to see that yet, but we should see some hard selling from here on in, just like we're seeing today. So tons and tons of opportunities that will be arising this next couple weeks. Even if we take a look at Bitcoin, I just want to analyze Bitcoin now. Bitcoin's actually a very interesting chart. So overall, Bitcoin, if you look at the short pattern, it's a bear flag that's looking to be triggered. It's going to be key where we close. If we close below these pivots, that means you've triggered this bear flag, and it's probably a 75 to 80% chance of going lower just off of this pattern. Now, if you look at the intermediate pattern, which is the medium term, this is also right on the cusp of breaking this channel, this bear flag pattern, and triggering a move down. So that is also something that we're watching. And then if you look at the major pattern, this is also yet again another bear flag. Let's flip to the weekly chart. So again, the major pattern, one of the reasons, this is another classic bear flag. You've had 1, 2, 3, 4, 5, 6, 7, 8 weeks of consolidation, and now it looks to be breaking. So on all three time frames, the minor time frame, the intermediate time frame, and the major time frame, the small, medium, and long term, you have bear flags that are on the verge of triggering, or if not triggering already, which means that this probably has upwards of 80% likelihood of having a very, very hard dump down in the near future on Bitcoin. So be ready. Bitcoin will have bounce plays, but just remember how fierce this sell-off was. And this one can also be very fierce. Around the 10 to 13,000 will be the bounce play opportunity, just depending on how the Bitcoin price action moves into those areas. But I do have a base case where I'll show you. Let me just erase this, don't know what that's doing. The downside target that I have for Bitcoin that it could go now is around 49.30. That's probably my 60% chance of happening. And then I would say the 3,500 mark, which is all the way down around here, before your COVID bubble, basically before the money started, and is around over here, 3,500. I think we could go down there in the worst case scenario. That's maybe about a 25% chance in my opinion. But overall, you have a double top off of this beautiful symmetrical channel. I think you're going to form basically a very, very symmetrical double bottom here. And that's going to put you around the 4,800, 5,000 mark, just depending on where it bottoms in the cycle, because this is slightly upsloping. And then you also have this longer term trend line where it's kept Bitcoin in for its whole cycle history. So if things get really bad, you may have a convergence of, say, these two trend lines at the same time here, which puts you into April of next year, where Bitcoin could bottom. Now, could it happen before? Yes, it absolutely could. Could it pierce this level? Yes, it absolutely could. So this is just a really good technical area. If you are a very cautious long-term buyer to buy, you're going to be getting a potential maximum upside opportunity if you were to buy down there with very minimal risk. Obviously, if Bitcoin is down there, the economy is in dire straits, the indices would be substantially lower, and things would certainly not be pretty, and it would certainly be very difficult to be buying. But overall, if you trust the charts, put the emotion to the side, and just try to read the patterns and understand a bit of basic macroeconomics, and following history as a guide. It's not always the same cycles, but oftentimes you can take bits and pieces of history to form what we're currently going through to give you a very, very strong likelihood of understanding where the potential price action is likely to head. It's all probabilities, and that's what this reading charts is all about. But so far this year, I would say we've been very, very highly probable in terms of success. So congratulations, and let's stay tuned for more price action as these things unfold. I'm away for the weekend, but I'll try to watch crypto. Actually, I probably won't even be watching crypto because I'm on a little bit of a retreat just to clear my headspace as the volume picks up back in the market since the fall is approaching fast. And again, look at the spiders. We're actually picking up volume compared to the buy days. So the sellers are now in control. The bears are clearly in control. 3 big sell candles, and these charts are certainly in trouble. There's your beautiful weekly topping tail, which we discussed last week, off of the 50 weekly moving average, right at resistance. Boom, failed to hold the retrace, and now the damage is done, people. These markets are in trouble. I don't care what anyone says. Yes, you can potentially bounce and retrace on some crazy exuberance or hope, but overall, this damage puts into probabilities that these markets are trending much, much lower in the near term. Thank you all for being members. Please give this video a big like, and we'll see you on the channel.